the biggest entrepreneur platform on the planet. This is Business Rockstars.
This is Business Rockstars. I'm Mark Lack, and joining us is Sean Briscombe in the house. He's the author of a new book called The Truth About Taxes. Sean, it's a pleasure to have you.
Thanks, Mark. I really am excited to be here.
Glad to have you as well. And you know, you're working on a lot of things. We're going to talk about those, but could you share with us what are you most excited about right now?
Yeah, right now I've got a couple of things that I'm really passionate about. Number one is our charity, Kind Foundation. The other is really just teaching this structure and this system to business owners and entrepreneurs and investors.
About taxes.
Yeah, so they can take the same information and create their own system where they can make a bigger contribution. I think that ripple effect is really what I'm focused on now.
And the biggest thing, I know we're going to talk more about your charity as well and your book, but what you're basically doing is you're helping successful business owners figure out how to save a lot of money on taxes.
Yeah, I mean, it's crazy.
As somebody who pays a lot in tax myself, I am very excited for this interview and your book.
Yeah, I'm excited too. I'm excited to get it out there to people because it's just something, it's a secret that's been buried for 107 years now, and not a lot of people know about it. And when you see it for what it is, it changes everything.
You were telling me before the cameras were rolling something like the 99% is uninformed and the 1% is informed on how to use these things. So we'll talk more about that. But first, I want to know a little bit about Sean, and I want the audience to as well. Did you always know you wanted to be an entrepreneur and get into taxes, or share your story with us? How did you get an entrepreneurship?
Yeah, no, I was, from a real young, early age, I was a diver. I trained for the Olympic team. From the time I was 8 years old, I was training at Stanford University with the college team.
Now, is this deep diving where you hold your breath, or is this high diving off of a
This is
board?
Springboard and platform, so 3-meter and 10-meter platform. And just took to the sport. I excelled at it for some reason. When I was 14 years old, I moved away from home to Mission Viejo, California to train with Greg Louganis and the whole Olympic team. Traveled the world with the national team and had some amazing experiences. And after my diving days were over, I went to work for Dell Computer. And at Dell, it was during the heyday when the stock was splitting and doubling every year, and they were throwing stock options at us like crazy. And so we made a bunch of money through Dell stock. Had no financial understanding or background at all. I just thought that I was going to get rich on Dell stock.
And did that happen?
It did. I got lucky. I exited and sold everything that I owned.
And is that when you got hit with a big tax bill?
Well, at first, yeah, I got slammed with a big tax bill, but more importantly, what I realized was that just because I had cashed out and had this liquidity event didn't mean that I could literally retire, because every single year that I was investing or buying or selling things, more and more of my money was getting sucked out.
Through taxes?
Through taxes and other things, you know, interest expense, taxes, inflation, you know, lawsuits, whatever it is. Those are those evil influences that are constantly attacking businessmen and entrepreneurs and investors and business owners of any kind.
And it sounds good in theory to make a lot more money, because I remember when I was getting started being like, yeah, but if I made that much money, who cares if they're taking half of it? But you just got to remember, if anyone's taking half of your hard-earned money, regardless of how much it is or how easy it comes, it sucks. Nobody wants to have a good chunk of their money taken from taxes.
Yeah, it's funny you mentioned that. You know, I grew up very middle class. My mom was a medical technologist. My dad was an engineer. Both of them worked at Stanford University while I was training with the college team there and growing up there. And in high school, I got to be really good friends with a buddy of mine named John Arriaga, and his father, John Arriaga Sr., was a real estate mogul in Silicon Valley. He had graduated from Stanford in the late 60s, and he and his roommate had purchased all the farmland around Palo Alto and Menlo Park and Atherton in Silicon Valley and started doing ground leases for them. Well, fast forward to today, and he's on the Forbes 500 list.
I was going to say, that's a good opportunity.
Like number 72 or something, worth billions and billions of dollars. And I was fortunate enough to be able to learn a ton from this family The family has done so much on that campus. Half the buildings on Stanford campus have the Arriaga name. The student union is Francis Arriaga Student Center. You know, their daughter, Laura Arriaga, teaches a class on giving at Stanford University.
That's pretty cool.
And so just being in that environment shifted my mindset from that very middle class lack mentality, you know, that scarcity mindset, to a whole different world.
Which most people are never going to be exposed to. Even if some of that information's in books, who's recommending these books?
Right.
Yeah.
And a lot of this stuff that we're going to dive into in a minute is literally hiding in plain sight.
But none of us are probably going to come across it.
No.
Unless you have that unique billionaire family friend.
Yeah. And there are specific reasons for that we can go into.
Yeah, well, let's talk about that real quick before we open loop everybody here. Let's dive in. What are some of these reasons why it's hiding in plain sight, but the 99.9% never know about it?
Yeah, so there are three key components to this whole idea, this whole structure, this concept. And the first is that in America, there are two different tax systems. Like you said, there's one for the informed and one for the uninformed, and both are legal. That's a quote from a guy named Judge Billings Learned Hand, who passed away back in the 60s. But Judge Hand was a judge on the Second Circuit Court of Appeals, and he was the most quoted judge in Supreme Court history when it comes to tax matters. And so his dissents, as well as his opinions, have been ratified and are the foundation for a lot of the stuff that happens in our country that nobody even knows about. And he said in 1961, in a court case, that in America, there are two different tax systems, one for the informed and one for the uninformed, and both are legal. We have two tax systems in America, the 1040 and the 1041.
Which are the forms you file your taxes
Yeah,
with.
that just refers to the forms, you know, the tax forms. There's a 1041 tax form, there's a 1040 tax form. Most people understand and know the 1040 system, and that's what most business owners, entrepreneurs, and investors are trapped in, to be honest.
Okay.
And the reason for that is very simple. It's because the professionals that are advising them on the business structure, they only know what they've been taught, trained, and educated to do.
Through the formal system.
Through the formal legal or tax system where they get their state license.
And
now,
each state is different?
Each state is different. This is a key component to everybody, that everybody needs to understand, is that, you know, the laws that govern the state of California or the laws that govern the state of Texas are very different from the laws of Louisiana, for example. In Louisiana, they follow French law. That's the foundation and basis for all their law. In Texas and California, we follow British common law. Two totally different opposing sets of rules, or rules of the game. And so each state has their own licensing requirements, and these CPAs, tax attorneys, accountants, even at the highest possible level, they have to get licensed in the state where they're going to practice. And when they do that, they go through the same exact teaching and training that everybody else goes through. Now, that's not to say that these guys aren't doing the best that they can. They're geniuses. A lot of them are incredible at what they do. But there's a whole nother level of education and understanding in the system.
Which, for their legal certifications, they were never taught and shouldn't probably be doing without a license.
Well, what I was able to discover was that this other system that has to do with the federal system that follows codes and is codified in things like the UTC, the Universal Trust Code, or you know, the tax rules of the game that enrolled agents can learn and follow and apply. You know, enrolled agents is a license that is given out by the federal government that allows that tax professional to do tax work in all 50 states, including U.S. territories. Your CPA can't do that. Your attorney can't do that. And it's no fault of their own. It's
and
not
if they can, I'm going to be upset because I've been
Well,
paying a lot of taxes here, Sean.
Yeah, and typically what happens is if you have businesses in other states, then they have to get licensed in that other state to file in that state for you.
Okay.
You know, which is normal. That's normal practice.
Yeah, that doesn't seem complicated.
But there's a whole other group of professionals out there that can operate in all 50 states, including U.S. territories, and actually understand the tax code at the federal level, not just the state level.
So for people listening, and I was just selfishly grilling you off camera,
No, you're good.
Is there a way to pay zero tax?
There is. In fact, the joke in amongst,
legally too, by the way.
Yeah. So, I always tell this story. In 2016, during the election, do you remember when Donald Trump and Hillary Clinton were doing the debate?
Vaguely.
It was a very famous debate because he said a lot of stuff that kind of shocked the world. One of the things that she pointed out was that Donald Trump hadn't paid federal income tax in 30 years.
Jealous.
What did he say in response to that? Do you remember?
I don't.
He said, that just makes me smart. Well, what he was referring to was this tax system. Now, the crazy thing is that the Clintons are in the same system. They do the same thing. When Hillary Clinton was Secretary of State, she got a salary. I think it was $290,000, something like that. That salary went on a 1040 tax return, and she paid taxes on that. That's the return that she shows the world and says, look, I'm a good citizen.
Which is the 1040 form we all have.
Correct.
Okay.
The rest of the Clintons' wealth, as with the Trumps, flows into the 1041 system. And the rules of the game are different.
Okay.
And so in America, there are two different tax systems. And those are the two different tax systems, totally different rules of the game. The second key component that everybody needs to understand is that taxes follow title or ownership. Now, you and I were taught as entrepreneurs that the way to build our wealth is to own more stuff.
Yeah, own a nice house, own a nice boat, own a nice car, multiple, own a vacation house, rental
buy
properties.
More land,
and if
assets.
you own it, you're truly wealthy.
Yes.
Yeah.
That's not the truth. That's not what's really going on. And that's not what the wealthiest families all understand. In fact, Nelson Rockefeller in 2014 was having a family reunion. The Rockefeller Foundation every year has their annual retreat. There are 130 family members in the Rockefeller family right now. They all descended on this retreat, which the foundation paid for everything, right? Because it's an event for the foundation with all of the trustees of the foundation. So it's a responsibility of that foundation to pay for all their stuff. They got to do the helicopter ride. They got to ride horses on the beach. They got to climb the volcano. They got to surf. And they still got to talk about philanthropy and giving back more. And because of that, it's a responsibility of the foundation. So, long story short, in 2014, Nelson Rockefeller was standing addressing his family, and he said, the key to success is to own nothing, but to control everything. To own nothing, but to control everything. Because taxes follow title. If you give up ownership of your assets, you're no longer taxed on that money. If you give up ownership to a separate entity, now that entity is taxed under different rules. And that's where the magic happens. The third key ingredient that everybody has to understand is that if you want to build massive generational wealth, like legacy wealth, you first have to learn how to give it all away. If you want to really build wealth in America, you have to learn how to give it all away.
So give us some examples of how we could give away our wealth in a way that still allows us to grow our own wealth.
Sure. So you may have heard about the Giving Pledge with Warren Buffett and Bill Gates.
Yeah, all the wealthiest people are giving away the majority of their net worth.
Wealthy billionaires around the world are signing a pledge to give away their wealth during their lifetime. That's key, during their lifetime. So they're not leaving the money as an estate transfer, right, in which would incur estate tax, potentially. What they do is they set up...
Which, real quick, that sounds, in theory, to the average person, like such a philanthropic, amazing thing to do.
It does. So there's a PR piece to this.
Because they make sure we all hear about, did you hear that so-and-so's giving away 99% of their net worth?
Yeah.
And in reality, you're about to tell us how that's helping them make more, potentially.
So there's a crazy story I can tell you to kind of illustrate this point. Warren Buffett's father, Howard Buffett, was a member of Congress. Now, Congress, they write the tax laws that you and I have to follow. They also write the tax laws that they have to follow. Just like medical insurance. We all have to pay for our own medical insurance, and we fall under these rules of the game for medical insurance. Congress has an entirely different set of rules of the game for their medical insurance. They're covered 100%, right? We're not. different rules of the game. Same is true with tax. Same is true with other things as well. But for the purposes of tax, the 1041 trust and foundation system, that tax code was supposed to be kept separate for Congress and their wealthy benefactors, their wealthy donors, so that they could keep their money, grow that wealth, and then give to those campaigns. And so in 1912, when the IRS was formed, and the government said, hey, we got to start collecting this tax, this income tax.
Which, real quick, just so people know, hopefully, the IRS is not from the Fed.
Right.
It's not part of the government.
Well, it's part of the Treasury. It's a department in the Treasury.
Yeah.
So the Treasury is there to manage the wealth of the nation.
But it's privately owned.
The Fed is privately owned.
Yeah,
the Treasury is part of the U.S. government.
Yes.
The Federal Reserve is a separate private bank that issues currency.
Yeah.
That's a whole other conversation we can have.
Exactly, yeah.
That's the Creature from Jekyll Island conversation.
Yeah, which is a book that people should read.
Absolutely, 100%. I recommend it highly after you read my book. But,
of course.
So in 1912, when the IRS was formed, Congress said we gotta start collecting tax. We're building out this country. We need more infrastructure. We need roads, bridges. We need schools, hospitals. We need to take care of the society. And they went to the wealthiest families, and they all met in this location and they convened and had this discussion about what to do. And the wealthiest families all said, no, we're not going to play this stupid game. We're not going to play your tax scheme game. And so
because the government doesn't actually have money, they only get money from taxing people.
That's right. That's right. The only revenue that comes into the government is from your hard-earned
money.
Yeah. You work so that they can get paid. That's the reality.
In hopes that they can manage society for us.
That's the promise. That's the contract that they have with us.
But there is a point where you start paying so much more in tax and the benefits don't rise with the increase in your payment.
Yeah, well, everybody wants to pay their fair share. I don't think there's anybody that you could talk to that if you said, hey, listen, we all understand that taxes are theft and it's a forced extraction. It's not a voluntary contribution. We get all that. But you're going to pay your fair share. I don't think anybody would tell you no, except for maybe Donald Trump. That's a different story. So he actually pays millions in taxes every year. It's a fallacy to believe that he doesn't pay taxes.
Yeah.
Anyway, when they set up this structure, they said, we got to collect this tax. And so the wealthiest family said no. They went back to the drawing board and they said, okay, what are we going to do? And they created a whole different set of rules for them. And they said, if you play by these rules of the game, we're going to leave you alone. But here's the agreement we have to make. We need to help people. So we need to collect this tax so that we can help the poorest of the poor and other members of society. If you're willing to take on that responsibility for yourself, we'll leave you alone. So if you're willing to take on the responsibility of giving and making a bigger impact in the world, you're good to go. But
which is real quick, why it appears that most billionaires and the wealthiest people are always doing these types of contributions and write-offs and donations and charities and foundations.
Yeah.
There's a common thread here amongst the wealthiest people
thread.
Following exactly what you're teaching. I just want to point that out.
Absolutely. So in today's day and age, they call that the giving pledge. And the pledge is very simple. All these wealthy billionaires have signed up and they are committing to giving away their wealth during their lifetime. What they're actually doing, however, if you look at the actual flow of the capital and the money and you see where it lands, they're giving it to their own private foundations. When Howard Buffett taught his son Warren Buffett this system, Warren just naturally grew up in the trust and foundation system. He understood how the game was played. In 2000, Microsoft was under investigation and Bill Gates were under investigation by the IRS for a couple of different things. They were taking in foreign income from foreign countries, from business, and not paying tax on it. They were doing a couple of things. And so the IRS clamped down, they seized everything, they locked him down, and Warren Buffett and Bill Gates went to lunch for the first time. They became lifelong friends. Warren Buffett taught Bill Gates this system, this secret tax system, this structure. 6 weeks later, the Bill and Melinda Gates Foundation was set up, the Bill and Melinda Gates Foundation.
Shortly after meeting with Buffett.
Like within weeks, Warren Buffett pledged $34 billion to the Bill and Melinda Gates Foundation to get it set up.
Chump change.
What do you think? Yeah, it is. $34 billion. What do you think they did with that money?
So Buffett put $34 billion.
He donated $34 billion to the Bill and Melinda Gates Foundation. What do you think they did with the cash?
Probably found some way to buy Berkshire Hathaway stock.
They turned right back around and purchased Berkshire Hathaway stock for the foundation.
Which therefore would increase the valuation of the stock tremendously to have $34 billion put into it. And Buffett just put profits back into his pocket.
Yes, so he gets to keep the money, manage the money, grow the money.
As his stock that was given right back to him.
Correct, and it's all tax-free. All tax-free because the foundation is a 501c3 tax-exempt organization.
And he's a part of the foundation as one of the trustees.
Yeah, if you look at the tax returns of the Bill and Melinda Gates Foundation, which anybody can get, it's public information, you see who the trustees are. There are 3 trustees. There's Warren Buffett, Bill Gates, and Melinda Gates.
So he donated money to himself in a foundation that he's a part of, and then that foundation, tax-free, was able to buy back his own company's stock, increasing the valuation and net worth of it, which Warren Buffett manages that $34 billion right back in. So it's like you're just moving things around in the way that the government has set up, but the average person has never been taught how to do this.
Well, this is an important piece for me. This is something that I'm really, really adamant about. In fact, I screen my clients based on this one concept that you just brought up. When you mentioned that he gave the $34 billion to himself, that's not entirely true because the whole game is based on ownership. Mm-hmm. If you give up ownership of your assets, you're no longer taxed on them. But you have to have a pure heart and intent or the IRS is going to come after you. I promise you they will.
They need that money.
Well, this system is so pure and just and good that if you monkey with it, if you're doing something that is not pure and not intended to be what the code was written for, you're going to get in trouble. So intention is paramount. How you operate inside of these trusts become the whole thing. That's it. And what we do with our clients...
You got to color in the lines, and you got to stay within it.
You have to play by the rules of the game. I'll give you an example. Donald Trump had a big fundraiser for his foundation at Mar-a-Lago a few years ago when he was president. He was auctioning off a self-portrait. No one bought it. No one bought his portrait. So he had his foundation pay for and buy the portrait. That one act was labeled as self-dealing, which is a violation of the tax code. And so the IRS nullified his 501c3 status.
So he needed Buffett to come back in and buy that for him.
So what he did was he shifted those assets and transferred them to one of his other foundations. He has multiple trusts, multiple foundations. Everybody does. You know.
So it's okay though to do what Buffett did with his foundation that he's a part of with Bill and Melinda Gates.
Yes.
That's okay.
Because he's giving up ownership.
Got it.
Now in his mind,
but he still controls it.
Correct.
And that's the game.
That's the game.
Okay.
It's control versus ownership.
And shortly after this interview, Mark Lack set up his trust and foundation.
Good.
My man, Sean.
I love it. Yeah.
So this is some powerful stuff. And I guess what I want to know is like, I know you talked about it earlier, but like, really, like, why is there not more people knowing about this?
Yeah.
Like, are you going to get taken out by somebody because you're revealing these secrets? I mean, I've read about some of this stuff in some of the books, but like, you're really a big advocate.
Yeah.
You know.
So this is a great conversation. I'm glad you brought this up. I really am, because if you go to irs.gov right now and you type in trusts, the first thing you'll see, not the second or third, the first thing you'll see is a PDF document on abusive trust schemes. Why would the IRS warn you about abusive trust schemes right off the jump? Do you think that they're trying to incentivize you to start a trust or
scare you.
disincentivize you to start?
Yeah. Here's all the bad things that could happen to you if you start a trust with the wrong intentions.
Now, that doesn't make the IRS the enemy. The IRS is not your enemy. They're not bad. It's not that the IRS is evil or trying to go after you. They're really not. They're just trying to do their job. They just want you to play by the rules of the game and validate and back up everything you're doing. So how you operate in the trust becomes paramount. Backing it up with documentation, what you're doing, the moves that you're making, the things you're buying, the things you're selling, that's the game. Now, people have been taken to court, and the IRS has sued them for abuse of trust schemes using this structure. But here's the problem. Every single time they've taken someone to court, if that person has been able to show them the previous case law, including Supreme Court case law from as early as the 30s, those cases get thrown out. That doesn't prevent the IRS from going after people, though. So,
of course, they want to do the shakedown and see,
with the full
they want the audit. Yeah, they want to audit.
And resources of the United States government. How scary is that?
Terrifying.
So,
which would scare most people away from even starting. And
from even looking at this stuff.
And they'll say, I'll just...
It's got to be a scam.
Stick with my current tax strategies.
Yes, I'll keep paying the hundreds of thousands of dollars because as a good friend of mine, there's a really good friend of mine who was a diver, and he's done an incredible job. He's a traditional stocks and bonds broker, but his firm is huge. He manages over $1 billion in assets and done really well for himself. And he has wanted to do this for so long. And every year he calls me and he says, I hate the IRS. I got a text from him just recently. I hate the IRS. I had to pay another $1 million too.
Yeah.
And I'm like, what are you doing? And his biggest hang up, and he says this every single time we talk, he says, I lay it out for him. I tell him exactly what the structure is, and he says, yeah, but the IRS will spend $1 million to get your $25,000. And he's right. He's right. You can't deny that. The IRS is vicious when it comes to that.
Yeah.
But here's the catch. They're not the enemy. They're just trying to figure out, what are you doing here? Can you show us and back up exactly what you're doing? And if you can do that, there's no problem whatsoever. So
I know what people are thinking is what I was thinking, and we talked about this off camera, so I want to bring it up, is like, at what point am I sitting here listening to this conversation saying, do I have the wealth to reach out to Sean and his company? Obviously, they're going to read the book. We'll talk more about that. I know a lot of this is covered in there. But like, at what point am I paying too much in tax? At what point do I need to be considered to join, and work with your company to be like, I want this laid out? A, can I do it by myself? B, at what point financially does one person or business need to be at to reach out to you to just have you guys do this for them?
Sure. No, it's a great question because this isn't a fit for everybody. It's just not.
So can they do it themselves?
They can if they understand. There are some critical details that if you miss those details, you could find yourself in a lot of hot water. That's what the legal team is for. That's what my legal team is for, is to back up and make sure that we're not doing anything that's going to even come within a few inches of those bumpers.
So basically what I'm hearing is somebody could operate on themselves, but you want to go to a doctor.
Yeah,
okay.
Exactly.
So then at what point do I need the specialist?
So it's a very, very expensive setup, initial setup cost.
Well, I guess it's relative. I don't even want you to say it's expensive when it's not expensive.
Well, it's more than most people want to pay, but it's a lot less than what I want to charge.
Perfect.
Let's just call it that.
And it's probably less than you're paying in taxes.
A lot less. So, but it's a one-time setup fee, and then think about this. Once you pay that setup fee for the structure, you're now saving your taxes this year, next year, the year after that, on into perpetuity in your life, your kids' lives, your grandkids' lives, forever.
Once these entities and trusts are set up.
Correct.
Okay.
So
with a little management throughout, if one chooses.
Of course,
okay.
Yeah. So
there,
you can hire the tax team, and they can manage your trust assets and make sure that the books are kept right and make sure that everything's documented correctly, and based on how much work they're going to have to do with your business, you can negotiate that with them. But,
so is there a level, I want to get clear for people listening,
sure.
So they can kind of identify, like, should I be reaching out to Sean right now?
If you're not paying $100,000 in taxes a year or more, this is the challenge we have. If your net worth is $3 million or less, your CPA, tax attorney, and trust attorney are probably going to do a really, really good job of lowering your bracket, which is the whole game that they play. How do we lower your bracket to pay less tax? They're probably pretty good at that. If your net worth is $50 million or more, Goldman Sachs and any of the big 5 firms out there will be happy to take your money and charge you $500,000 or more for setup costs and hundreds of thousands of dollars a year in fees. And you have to have all of your money with them, the account set up. You have to have millions of dollars sitting in a money market account earning nothing that they manage just to be able to have the permission to be able to have your business structured this way. But having said that, they're probably better equipped to take care of what you need.
At the $50 million net worth.
Correct.
Okay.
But in between, nobody's taking care of those business owners and entrepreneurs. There's a gap there that is so large, it's sickening.
Yeah, because the 50 million net worth, you're talking a decimal of a percent.
Yeah.
Who even is in that bracket.
Right.
The majority of people aspire to be in the range you're talking about.
Sure. Even the 1%ers,
yeah.
you know, they fall in that gap.
Yeah.
So, you know, you may have a net worth of $3 million, but if your tax bill on an annual basis is not about $100,000, then you're probably okay where you're at, and it's going to be a lot cheaper.
So does that mean I could be an individual working at another working as an employee, or does that mean I'm a business owner paying $100,000 in tax? Just so people can identify.
That's a good question.
Is your better target audience a business owner versus an individual working at a company?
Wow, that's a great question, because here's the reality. When you leave the 1040 world and you go into the 1041 world, when you make the decision to shift, which is, it's just a decision, that's all it is, get out of the 1040 into the 1041, you're now saving your tax dollars at the city level, the county level, the state level, the federal level, your business taxes,
the space
your capital
level.
Gains tax.
We're going all the way up into space now.
I mean, it goes from the ground floor all the way up.
I love that.
Literally. So how much money are we paying in taxes all along the way in all of those little different transactions? You know?
Yeah.
That's the reality.
I think people listening right now know at this point if you're somebody they should be reaching out to.
Hopefully.
So let's talk about the book real quick, because I want to know more about what inspired you to write a book. Because writing a book is difficult. Mm-hmm. It's not easy. Even with ghostwriters and all the support in the world, writing a book is tough.
Yeah.
So let's talk about that. What inspired you to write the book?
So end of 2019, going into 2020, I was working with a awesome kid up in Colorado, young kid, 22, 23 years old, fresh out of college, crushing it in his business.
Okay.
All right. And he had written a book. And I was actually using his book with my clients. That's how good his book was.
Wow.
And he turned to me one day and he's like, dude, what are you doing? Why don't you have your own book about this? And that kind of kicked it off for me. So enter 2020, Corona hits. We're on a 2-week lockdown nationwide. I stopped shaving, and I decided to write a book. And that was kind of the impetus.
That's usually the combination. Stop shaving, write a book. I love it.
So it took me about 8 months to get it knocked out and done. It's at the publishers right now. It's about to be launched. I'm super excited about it.
So what is the biggest premise that you want someone to take away? I read the book. People listening right now, they read the book. Mm-hmm. What is the core thing you want them to walk away with? Obviously, we're paying too much in tax.
Yeah.
The book is called The Truth About Taxes.
Yeah.
So I know you're revealing that. But I just was curious. I didn't want to put you on the spot. Is there something that you're like, I want everyone to walk away feeling like, boom, empowered, that they can pay less in taxes?
For me, it's bigger than that. You know, to me, this isn't about, it's not even about taxes for me. When I was starting out as a young entrepreneur, trying to figure out this game, I was in that scarcity mindset, just trying to pay the bills. And then all of a sudden, something amazing happened. I hit this level of abundance where the bills were paid, I was taken care of, my family was taken care of, and I was like, I got this. What's next, right? there's no next step for business owners and entrepreneurs. They're left out in the lurch. Now, if you're worth 50 million, there's a whole team that you can employ that will show you how to create a legacy, how to create something that will outlast not just your life, your kids' lives, for generations to come. Who's taking care of the business owners and entrepreneurs that are falling in the gap?
Which is true, because again, that's the majority.
Yes.
The vast majority.
So to go from that level of abundance to true prosperity is when you are so set and you have such a solid, rock solid mindset that your life has shifted from growth to contribution. And that for me was the key. When I shifted my attention of my business from growth to contribution, that's when this thing was unveiled to me. That's what this whole key is about. If you can focus your attention on what your mission and purpose is, we can now reverse engineer the whole structure for you to pull that off. And more importantly, we can collapse time and help you hit those legacy goals much, much faster.
I love that. So this is so much more than just taxes. Taxes and in everything you're teaching is the vehicle to allowing business owners and people watching right now, like myself, who's interested in actually creating the legacy we want for our family and the lifestyle and the freedom and the security and the certainty that we all want to have.
That's it.
And taxes happens to be one of the best vehicles to make sure we can make that possible.
Yeah, well, if you think about it, taxes are the biggest bill that business owners pay.
For sure.
Period.
Yep.
If you can keep that, that changes everything.
Yeah.
And for me, I got to a point in my career where, you know, we talked a little bit about this on the you know, before the interview, but my wife and I lost our first child, and it absolutely devastated me. But in that pain, we met some friends at church that were going through foster care. They were getting licensed to take on kids. They had kids of their own, and they wanted to help more kids. And so they said, why don't you give it a shot? Who knows? Maybe that's how you're supposed to grow your family. Well, fast forward to today, we've had tons of kids come through our house. We've adopted 2 girls. They're beautiful, beautiful girls. We've had one of our own. And I right away saw that if I want to help these kids more, if this is what I want my life to be about, I got to figure out this game. I have to figure out how to keep my money and grow that wealth so that I can give back more. And that became my mission. It wasn't so much about getting rich or making more money, which, believe me, I want that just as much as anybody. It became about something more. It became about something much bigger. Something that, if you take me out of the picture, it's still going to be going. My wife and I created Kind Foundation with the sole purpose and intention of helping these kids heal from the trauma and abuse and neglect that they've been through. And we have helped hundreds and hundreds of kids in the foster care system to feel loved, to feel wanted, to feel like their life matters. They have a future through resources, education, training, therapy, a ton of different ways that we can do that because we have the flexibility and control of our money because we're not giving it to the government. We get to dictate where it goes. And if you ask business owners and entrepreneurs and investors, one question, if you say, do you think you could do a better job or the government with your money? What do you think they'd say?
I can do a better job.
You know,
Yeah.
We all know that. That's why we start businesses to begin with. We want to do something big so that we can make an impact. And then we find ourselves 10, 20 years down the road, spinning our wheels, thinking, how do I retire? How do I retire? When our original goal was, how do I make a bigger impact? That's the state of affairs today, and we have a solution for those people.
And I love that. It's so beautiful to share your story because what you're really talking about here is like business owners don't really want to retire. They want to continue to grow and they want to continue to make an impact because that's where true fulfillment comes from. And as you said, the government will give you these tax advantages if you come from a place of good intention and you follow the rules. And that's where your story and your foundation is so beautiful to share because it's clearly something that means something to you. So you're in that alignment and that intention and you're congruent. So when you're saving all this tax money that's going into your charity, that probably not only makes you feel good you're saving money, but it clearly fulfills you and lights you up because you're making a difference with something, not to save tax, but because clearly that is a huge part of your life. And that's what's so beautiful is the alignment between the contribution is how you save the money, and the contribution helps you get more fulfilled.
Sounds like you've been in that spot before.
I get it. It's beautiful. It's amazing.
Yeah, yeah. It's the key to the whole game, you know. It's the tax code's very simple. You know, it doesn't take a genius to read the words in the tax code and to interpret them. The problem is that, so my attorneys, one of the things that they told me, they said, listen, you know, and these guys are prosecuting attorneys for the state of California. These guys go after people that are violating contracts. And they said the way that we get them is this one concept, this one idea in court called form over substance. Form over substance is a key legal term. What it means is that you could legally be following the letter of the law, but if your intention is to deceive and evade taxes, you're still going to get busted because your intent was to deceive. Intention is everything when it comes to the tax code. If you follow the code and your intention is pure, and you can validate that with documentation and, you know, experience, then everything works. It's just so simple.
Yeah. I love that. And that's so beautiful because, again, you're just making it so easy for people to get started because, like you shared a story of your friend earlier, most people are scared to get into it because they're afraid that something worse will happen than just paying the current amount of tax they owe.
Yeah. I have a buddy, a good friend of mine, who he just exited his oil and gas fund. It's a huge fund, $18 billion fund in Houston, Texas. And he moved his family to Puerto Rico.
So big liquidation event, big tax event, moved to Puerto Rico where there's zero tax to 4% or whatever.
Yeah, moved to Puerto Rico to establish residency so he didn't have to pay that exit tax.
Which I was asking you about earlier, and you said that's not really the best thing that you could do.
I mean, it's an okay strategy. There's nothing wrong with it. And most of the strategies that your CPAs, tax attorneys, and trust attorneys give you are good strategies. They're not the bad guys here. Give them a break. That's the message I want to send people. Don't go to your tax attorney and beat them up for not knowing this stuff. They're doing a great job. But I had a mentor one time tell me this. He said, Sean, don't let good be the enemy of great. If you have an option and a choice between something that's good or something that is great, always choose the great option. Don't let good be the enemy of great. And that's what we're talking about here. There are tons of good strategies out there that are perfect fit for a lot of people. And then there's the 1041. It's totally different.
Yeah.
It shifts everything.
One number, 1040, 1041.
That's right.
That reminds me of the analogy between 211 and 212.
Yeah.
And that 1 degree difference is boiling water, which was the steam engine, which was the Industrial Revolution and the railroads. 1 degree difference.
It was the flashpoint for everything in industry. 1 degree difference. I love that.
So that you should use that as your thing for moving forward with tax.
I'm going to steal it.
You're 1 number away on your tax form. 1040,
That's
1041.
Brilliant. That's brilliant.
You're 1 number away from saving millions.
Brilliant.
And setting your whole family up forever.
That's great.
I love it.
I'm going to steal it.
Discovered in the interview. You
That's
saw it
right.
here first. So what have we not covered that we need to make sure we leave the audience with? I want to make sure that you feel like, you know what, you've clearly conveyed a ton. And if there's nothing that's coming to mind, then I'd love to know what your thoughts are for people who are just getting started in entrepreneurship that are struggling. And we can answer that one too if you want.
Yeah, so there's 2 different paths. Starting out in entrepreneurship is always difficult. This system is best designed for entrepreneurs and business owners who control their income. W-2 employees can use parts of the system. I've got a airline pilot, flies for Delta, great guy. No family, no kids, travels the world, makes really, really good income, but he's W-2. So he can't use the full force of the 1041 system, but he has a private foundation that we set up. Every year, he donates to his private foundation, which reduces his taxable income. Last year, he called me up and he said, hey, we got to calculate how much do I donate to my foundation. And so we ran the calculation, and it was like, I think it was like $68,000. If you donate $68,000, that triggers, it lowers your tax rate to the next tax rate and triggers a refund. Well, that refund was $22,000. So what's 68 plus 22? That's 90. That's a $90,000 swing for him with one decision. He gets to keep that $90,000 and grow that wealth in his foundation. It's funny because he called me the other day and he had been on the phone with his younger sister. He's young, he's in his 30s, and his sister's young, she's in her 20s, and she's like, calls him up, he's Indian. She calls him up and she's like, hey brother, what have you been up to? And he's like, well, I'm trying to figure out how what groups I need to give this money away to.
Good place to be.
Because in your foundation, you still got to play by the rules of the game, and one of those rules is you have to donate, gift, grant, or donate 5% of your wealth in that foundation each year to charity. Or to
That's a small number, by the way.
It's 5%.
That's it?
It gets better than that. That 5% can be a combination of expenses as well as donations.
Wow. It only gets more exciting.
The rabbit hole goes very deep.
Yeah.
But this guy's talking to his sister, and she's like, you're doing what? He goes, I'm reading the tax code. She goes, you're so boring. Why are you reading the tax code? And he's like, I got to give away this money. I got to figure out how much I have to give away, what the rules of the game are, and how the most effective way to do this. She says, you're giving away money. How much are you giving away? And he goes, about $15,000. You're giving away $15,000. Like, she couldn't believe this. He's like, yeah, well, I have to. She got so excited about it. By the end of the conversation, she was all in. She wants to help him find the charities. She wants to help him raise more money. She has completely shifted her mindset from, gosh, brother, you're so boring reading the tax code, to how can I help? And that's the takeaway for me. That's what this shifts. My kids, my 3 young daughters, one of their favorite things to do is to go out and have lemonade stands with their friends down the street. Here's the difference. Every lemonade stand on our street donates the money to Kind Foundation. It shifts their thinking. When they're talking to their customers, they tell them that.
I would buy so much more lemonade. Or just give them $100 for my one little lemonade.
If you're a business owner,
yeah,
and you have a foundation and a philanthropy that you're passionate about, and you're talking about that, do you think you're going to be attracting better investors, a better group of people, better partners, better customers? It shifts everything for people. That's why I'm so passionate about it.
Yeah, that's amazing.
It's not the tax code.
Yeah.
It's more than that.
That's just like the means to the end. That's like a benefit of the other benefits.
Your business is the engine. The tax code and the structure is the game. The result is what you're going to be able to leave behind on this earth.
Well, I can tell you one thing. Before this interview, I hated taxes, thought they were a boring subject, and wanted to leave it all to my attorney and CPA. But now I'm more excited than ever to dive in, honestly and authentically. You know, I already said we got to keep this conversation going.
Sure.
But with that being said, the book's coming out. We got to make sure people can find that. I know you had a website that we could send people to. So as we wrap the interview, where is a place that we could send people to learn more about you, contact you, and also get your book?
Sure. Truthabouttaxes.org.
Awesome.
It's a .org intentionally because the proceeds from the book, guess where they're going? Kind Foundation.
To the Kind Foundation.
Yeah. So when you buy a book, I don't know what the price is going to be. We're going to play with the pricing, but
it's a book. It's affordable.
It's a donation.
Yeah, love
You're
that.
not buying a book. You're donating to these kids in foster care that need this stuff, these resources, so that they can heal. That's what you're doing. And here's the deal. If you want to donate more money, I'll send you more books. You can give them to your friends. You can give them to your business partners, your colleagues.
Help you get it to be a bestseller.
Yeah.
That's the secret.
But it's not about being a bestseller. It's about how much money can we raise for Kind Foundation.
Yeah, I love that.
And of course, now you know the game.
Thanks to Sean Briscombe in the house. My man, thanks for coming on the show.
You bet.
Appreciate you. I'm Mark Lack. This is another episode of Business Rockstars. If you want to see more, head over to businessrockstars.com.